Hello again, guys. Right, this is an impromptu video based on all the weekly stuff I'm doing, and I have to say, trading with a weekly bias, i.e., a big candle up, 3CR, expecting a pullback, and so on and so forth, is, in my opinion, probably something that I've forgotten because I used to do a lot, but in a slightly different thought process. But because I'm spending a fair amount of time, well, a few hours at most at the weekend, studying them more than I would, but it just goes to show what karma can do for you, because sort of trying to put ideas into people's heads on the internet about trading by thinking slightly outside of the box is absolutely killing it for myself. I'd never used to trade Asian session, and I've had a stonking Asian session this morning, then had a little nap, woken up by the farmer feeding his cattle in the farm near to me, which is a nice way to wake in the morning. Alternatively, you get the train crossing the footpath a couple of miles away, like you may well have heard, is always a good indication of the time of day as well, once you get used to the train timetables. So I digress, but we're looking at EG, Euro GBP. Don't often trade this, but the reason we're looking at it is because it's a reversal, if you like, of what we look for. So it just gives you another opportunity, another way to think of candles. It's a reversal of the big candle reversal, if that makes sense. I've drawn this supply area here, connected with these levels here, because they are the highest level. Easiest way to get your most precise supply and demand level is always from the highest time frame. And remember, this is a weekly, and it gives us a really, really good indication of the whole week's worth of trading. But this could just as easily be an hourly or an H4, and you could be looking at shorter term trading. Even so, if you're new to what I do, the weekly charts still give you scalping opportunities, because it just gives you the longer term bias, which is what we as traders should always be trying to trade from. Always work from the higher time frames down to get your, conviction, if you like. I mentioned conviction on a gold short I took. The conviction of knowing or seeing gold or the commodity pair, Aussie dollar, US dollar, because of all their gold mines and stuff. They tend to quite often move in the same way, but don't take that as read. Just use it as an additional tick box. If they're both looking the same, it just gives you that additional reason to perhaps have a go. Anyway, I digress. What are we looking at here? Well, there's a load of stuff we're looking at here. We've had a big candle reversal 2 weeks ago. There's the reversal, so we should expect an up move, and that was the up move. So when we were here wondering what to do, we could have quite happily expected possibly more sideways, or a continuation in the direction of the 3CR. And the reason the 3CR should be long at this point is just basically you've got the low, high, high, low, high, high. You've closed above the high, low, lower, high, lower, low. So we're in an uptrend. Then you expect it to come back and test old resistance broken as support, and then you expect something else to happen here. It can go sideways for bars after bars after bars. So it could be an inside bar here. It wasn't, but it can go sideways for 1, 2, 3, 4, 5. Always look at these charts as if they're 5 or 15 minute charts, just to expect what may happen. They can just, of course, not have a pullback after the 3CR and just take off, or they can stop here because of this test up and collapse. We use the lower time frames to find the direction, but in this instance we haven't got a big candle body. So this is the point of this video. This candle is not like this one. We've got other examples of let's have a look at gold quickly, and No, gold wasn't one. Let's have a look at AUD/USD. There's a big candle, 3 candle reversal. So we haven't got that long wick like on the Euro GBP. That's the big difference. So what that tells me, and notice how this is now pulling down nicely, 64 pip move today, whereas it only moved about 20 pips yesterday. So I half expected this to happen because yesterday was a bank holiday, excuse me, in the US, in America, so Labour Day. So back to Euro GBP, that I don't even know where it is because I never use it. Here we go. So the difference being, the sellers have already been found at this supply area here. So the reason we're, the thought processes are big candle into supply, sellers. That's what caused that move. So, sellers have had their bash. Buyers are coming back into the market for the reason that we've explained on this whole 3CR. So even this second go at buyers having a go at the sellers, sellers have overwhelmed the buyers. Sorry, I'm getting tongue-tied now. This is, shooting star, inverted hammer. I never know the proper terminology for these things, so apologies for that, purists. All of these. This could be some sort of, I think they call it tombstone doji or something, or some butterfly or some inverse whatever. But back to this, the point is the sellers have had another go, and they have in fact overwhelmed the buyers at that point. That's why it closed down here. So at this point here, what you should really be looking for, if you follow all these candlestick aficionados, is possibly a break below the low there. I think that's what they do. It's also an inverted pin bar, I think they call it. So the right way to trade this would be potentially the break below the low of it. But don't get me into that sort of stuff. That's really, really way off what I'm trying to explain here. So having said that, we know the buyers have been overwhelmed, but this is not a indicator of get involved in shorts. The break below would really be the indicator of that, and this has done exactly what I would expect it to potentially do. We've had the reversal, we've had another push up, iffy looking candle. That, in other words, what I was trying to say was you can't trade this short. So the real option, until it gets below there, so the real option should be to watch to see what happens to the long side. And all you do, I'm not going to go into the lower time frame chart and show you. That's all been covered 1,000 times now, or possibly 800 times on my videos, and 20,000 or so tweets and charts on my Twitter feed. So all you need to know is that this is telling you the bias is to the long side. This is telling you the sideways motion is happening. This is potentially the move back in to the long side bias. I mean, you could get all technical and start to talk about 2B reversals, swing. There's a reversal there, sorry, a trend reversal, trend line reversal. Or if we look at the line chart, I haven't done this, so I'm not sure. Yeah, 2B reversal, swing 1, swing 2, swing 3. Stick the low there, although you would be looking at candle. The break below, so let's have a look at the candles now. So that it's harder to see. This is why I love the line chart so much. But look how it's broken below, and then subsequently kept breaking below, and then Vic would say the subsequent candle break would be the high you want to look for. I'll just move this one to save messing up the charts too much. And he would say we want to be trading above there. So you could use that as the example. It's pulled back. It didn't. You haven't broken above that high there. Then it's actually I've got the wrong subsequent candle there, haven't I? I do apologise. That's the subsequent candle break, because that's the last low before the sort of final low, as it were. So he would say, look carefully at this and trade long with the stop somewhere down here. And once again, you can see we've actually pushed and closed above that level, this red candle's high, Getting a bit technical here, but I didn't intend to. But you know, you can't unlearn this stuff. So and then, as you can see, it's come back and tested that level almost to the pip, and then pushed on up. So if you go to the lower time frames to trade this, you'd be looking at your hourlies, 15 minutes, 30 minutes, all of those lower time frames to get your correct entry using the RSI Histo and 3CRs. So just a different look at weekly charts. You don't have to just look for that. That was another point of this. It doesn't have to be that. Always, you know, 3CR is your leading indicator, if you like, on the weekly. You can use the monthly to, I meant to move to the monthly, didn't I, to find the easiest way to identify your flip zones. So a monthly open and close, or close and open, would be a more precise way to draw this level there. So if we look at the monthly, and we're fully zoomed in, so stick the open and close on that level there. That's the close of that candle, then the open of that one. It's pushed down. You can see it's been used by the previous month as well. So 1, 2, 3 touches around that area. So the blue one, we'll get rid of the blue one now, and you'll see the thin green line is my critical flip zone area there. Go back to the weekly, and that would give you the precise important level, in my opinion, according to the monthly battleground, if you like, the flip zone, price pivot zone, whatever you want to call it. And once again, that almost coincides with these resistance levels here. So, you know, price altercations, if you like, price battlegrounds, price levels, choose particular levels to have their fights for a reason. So and a monthly and weekly chart can give you these indications, and then we might as well just slip down to the daily to have a look at that as well. And the previous day then would, or previous days rather, would start to tell you what to expect. So we can see clearly here, this is Monday, this is today, Tuesday. Monday, we've been part of a downtrend, an inside bar, high, low, lower high, lower low, lower high, lower low. That's the downtrend, and you can look on the H4. I'm not going to do that, but if you looked on the H4, now you can clearly also see another 2B reversal on the daily chart. That's VIX low, swing 1, swing 2, swing 3, broken through there. We'll put a high on that bar that pulled through, and that is pretty much VIX Barandio's break level. And as you can see, the price really did absolutely fly. Two big bullish candles there, and then just that bit of sideways that weekly red doji was telling us, or whatever it was. Yeah, it was a doji, wasn't it? The weekly doji, that's all that weekly mess in there, and then boom, off we go. So you can read all the different time frames to work out exactly what's going on. You know, there was a strong 3CR up on the daily there too. This is a 2-3 day pullback, or a 2-day pullback, messing around, and then resorting to the original move, and that's the top of the 2B there, with a bit of mess there as well. And that would be, well, personally I would aim for that potentially today, because that's a bit lower actually, the low of that green candle there, because that's the last resistance level of this trend here. Support rather being tested as resistance. So support, the low of the candles there, and that will most likely cause a bit of a stagger, if you like, stutter in price, then potentially a push down, and then back up to VIX. I've seen so many of these and studied the 3CR's VIX levels up there. Every one of these levels will cause a problem with price. And if you're a follower of the strat, then you should start, and I'm starting to look for broadening formations, because this is where possibly sellers get caught in if you follow the strat, and then it continues on up further. So there you go, another look at weekly charts. Now we don't just have to look for huge weekly bars, we can look for 3 CRs a couple of weeks ago and still get some valid, very important information in what direction we should be considering trading. Thanks for watching, have a great day.